The number of banks per capita in the U.S. is
5,000.
Yes, 5,000 banks. Even in fairly large countries, there's like 20 banks or something.
I know.
And like in Canada or something, there's not that many banks in Canada. Like, why are there 5,000 banks in the U.S.?
I think it's a history of who owns them. You always have to remember with a bank that the American taxpayers are your liquidity stack. I can't write a business plan that says I'm putting it all on red.
Yeah.
And I'm investing all in Bitcoin. Sorry, American taxpayers, if I screw this up and bet wrong. We're from Atlantic City. And by the way, I did grow up going to Tyson fights with Donald Trump when I was a kid, which is mind-blowing in retrospect.
Hello, fellow data nerds. My guest today is Jackie Reeses. Jackie is the co-founder and CEO of Lead Bank, a leading commercial bank. Prior to Lead, she served as one of the top executives at Square, which is also called Block, where she built Square Capital from launch to a multi-billion-dollar lending business. She's also the former chairman of the Federal Reserve Bank of San Francisco's Economic Development Council and the Kansas City's Fed's Community Depository Advisory Committee.
Yeah, a lot of words.
Long words, yeah. Jackie, welcome to World of DaaS.
Yeah, although I will tell you, one of the things I'm most proud of that doesn't come up there is that I wrote a book called Self-Made Boss, which helps really micro businesses start, run, and grow. Like the food truck, the hair salon.
Okay. All right.
Like
that should be required reading for many people. Yeah.
That's the group of people that I really wanted to help. And so like it wasn't a commercial endeavor. Like I made zero money off of it. But I think it's super cool to help this group of people who I am forever grateful for.
Oh, I love that. Okay, I'm gonna check out the book.
It's good.
Now we're seeing this kind of fascinating shift right now, where lots of fintech companies are becoming banks, and tech companies are trying to become fintech, and every bank is becoming a tech company. Like, which of those transformations are actually working?
Yeah, what the heck is going on? Why does everyone have FOMO? You know what? I think the idea that that you want to become a bank is a really nice thought, because usually fintechs and tech companies believe that they could do anything. They can, trounce through any prior history of what's been done before. And like, no problem. That's at least the way I started when I was at Square and we started a bank there. It complete naivete. And what I had not quite appreciated was that you have to wake up every morning and say, I want to be the CEO of a bank in order to truly run a bank. And my bank is a financial infrastructure company. Like, it's a little bit different than a typical consumer bank, but I still understand who I'm beholden to, with regulators as one of my most significant stakeholders, in a way that is infinitely more extreme than when I ran a tech company. And so I think fintechs,
in some ways, almost like they're on your board, the regulators, right?
Oh, they're like part of my company.
Yeah.
And so I think fintechs like the idea of controlling their own opportunity set, having to operate at the speed that they want. And before Lead, they never really had that option. Now that fintechs, consumer companies, embedded finance companies have the option to work with Lead, I'd say the appreciation for what we do and the infrastructure we provide and the fact that we can work with them in the same way they like to work has mitigated some of that frustration that you suffer at a fintech, where you think you need to own the rail, but in reality, they could work with someone like us and have someone outsource the depth of regulatory controls that we need to do while they get to operate in the way they want to operate and build their products the way they want to build. And so I think as much as that's true, I think people like us have kind of changed the dynamic of that market. And I think we're opening up people's eyes towards the opportunity that they can actually have a good partner who is a bank.
Now you bought Lead
to build their infrastructure.
You bought Lead in 2022. How does one even go buy a bank? Like, can I just buy a bank if I have enough capital? Like, how does it work?
So historically, banks have been the purview of very wealthy families in a community. Some of them get really big. But if you look across the country, it's always some wealthy family that owns all the local banks, or many families. and they just stay in the family for generations. And I think that's worked for a long time up until the technology that's involved has become more important. And so for a bank, and we'll put a pause on that. But when I went to go buy Lead, I bought it having already started a bank. And so I already knew what I needed to build and what I needed to find in order to build a fintech infrastructure company.
Yeah.
And so I went on a path to find a very successful bank, incredibly A-plus charter in a great state, great regulatory framework, right employee base, right forward-leaning group of people to start from. And so I had to buy something that was mid-size. So I bought a bank that had about $700 million in assets. So it wasn't a tiny bank.
Mm-hmm.
And
it was a public company at the time?
It was private. It was owned by a family.
Okay.
And
why are so many of these banks public? Like, there seems like there's so many small cap banks out there in the U.S. Why every time I look up like my local bank that drive by, which I've never even heard of, it's actually a public company, which kind of floors me.
Well, that's because earnings are steady. It's like steady Eddie. That the business doesn't turn over, the employees don't turn over, they generate strong ROI quarter after
their
quarter.
Market caps are 25 million, 30 million, 50 million. Like they're these tiny, like they shouldn't really be public. Why are there so many?
I agree. They shouldn't
companies?
really be public companies. They probably wanted the capital because balance sheets in banking matter. And so you have to have a strong capital base in order to actually pursue your business. And so unlike tech, for example, where the income statement and your operating metrics matter, in a bank, having a handle on how you manage your balance sheet really matters. And so they might have gone public for the sole purpose of increasing their capital base. Having said that, we've taken our bank from being a tiny private company to being one of the largest banks in Kansas City, one of the largest fintech banks in the US. We hit a high watermark of about $2.5 billion in assets a month ago. And so we're rocking and rolling from having started with $700 million in assets when we bought the company in August of 2022. We've added a lot of clients and we've totally changed the nature of how we do business.
But how does one, like, if I want to, like, okay, so like there's a local bank.
If you want to go buy a bank,
if there's a local bank with 50, there's a public company, it's like 50 million market cap. If I want to bid 70 million for the bank or something like that, I have the money in my bank account, I want to buy it. Like, will they, can I even do that? Like, is it, or do I need to have like some sort of weird regulatory thing or something? No.
So if you're keeping their business plan and you're keeping things as is, you could go buy a bank.
Okay. But if you want to change things.
If you want to change things.
If I want to make it more tech enabled in a way, or
so you have to write a business plan and submit the business plan. Because remember, with a bank, that the American taxpayers are your liquidity stack, meaning they're your liquidity preference. If something happens,
they are the last resort. Yep.
Yeah, they're gonna basically take your bank over.
And it's the FDIC. Is that the organization? That's okay. Yeah.
And so I am beholden to American taxpayers. So I can't write a business plan that says I'm putting it all on red.
Yeah.
And I'm investing all in Bitcoin. Sorry, American taxpayers, if I screw this up and bet wrong.
Yeah.
Like that doesn't fly.
So there's a conservatism that what you have to run as a bank, which kind of makes sense. You can't.
It makes tons of sense because as a taxpayer, I don't want to be on the hook for a bunch of tech wackadoos who decide that they're putting, all their chips on red. And now all of a sudden I'm beholden. And so the regulators actually control who buys it and what they're going to do with it.
If you're enjoying this podcast, please sign up for our newsletter. Go to worldofdas.com. The link is in the description below. Now back to the video.
Now, who buys it? It's not like a country club membership where if they don't like me, they're deciding they're not going to take me. Yeah. There is a sound business logic to how they look at who a proper buyer of a bank is. And it's more aligned around financial acumen, financial plan, expertise. They just want to make sure that they're putting a bank charter in good hands. But it's not like they're vetting me for my personality and my good looks to say, I'm not letting you have a bank unless we're completely That's not what's happening. But like when we went and bought Lead, we didn't change the business plan. They were doing banking as a service. And we took over the capital base from the current family and just switched out the capital base. And so, and I had already started a bank before, and I had spent 20 years running regulated businesses. And so, and I was involved with the Fed for 10 years.
Yeah.
And so when you looked at my resume, my co-founder was the chief credit officer of Square Financial Services. My other co-founder was the general counsel of Square Financial Services. I had been involved with the Fed for 10 years. And so that's a resume that's impressive. And
why are there so many small banks in the U.S.? Like the number of banks per capita in the U.S. is
5,000.
Yes, 5,000 banks. I mean, there's in a lot of countries, even in fairly large countries, there's like 20 banks or something.
I know.
Like in Canada or something, there's not that many banks in Canada. Like, why are there 5,000 banks in the U.S.?
I think it's a history of who owns them. They're all these little...
Because it's just these little families who have some sort of like political connections in that little town or something.
But by the way, across the don't forget, United States is big. It's diverse. Like I'm on the Kansas City Federal Reserve's Community Depository Advisory Committee, CDAC. When I was first asked to do this, I thought the Fed was crazy. And I was like, I don't know that I know anything about, micro lending in small communities across the rural plains of the United States. But it has been so eye-opening for me because on this committee are banks from Wyoming and the Dakota, amazing places where I have learned about ag banking and how ag banking works in the United States. And most of the banks in my region do some combination of ag banking and commercial lending. I had never been exposed to that in my entire life. These banks serve a purpose.
Yeah.
And so
a real purpose.
There is no fintech that is financing steer in advance of the cattle season in the same way that these tiny $400 million asset-based banks are doing in Wichita. And so if ever you want to have your arrogance smashed out of you because you come from the world of tech and you think you've solved all the world's problems, show up in these local communities and understand the impact that these little banks have on those communities and some of these industries that we're less familiar with. And it is quite an eye-opening life learning about how these banks are part of a local community and how they lend to a local community. And without them, these communities and these businesses would die because they are the lifeblood of farming and other industries across the United States that when you step up in the 50-state world of tech, where you're trying to aggregate your products to operate across the United States, you're certainly smoothing over these populations in the United States.
Now, the Fed has had a bunch of they have these new long-term debt requirements, and those have challenged some of the regional bank M&A market and stuff. Like, what happens to all these subscale banks if they can't afford to modernize, but they also can't sell? How does walk us through the next 5 years?
I do worry about it, to be honest with you. I worry about it for a few things. One, while I am a big proponent of stablecoins and we've backed and wanted to support the growth of the stablecoin industry, I also worry about what it does to local community banking across the United States.
Walk us through. What does the stablecoin have to do with the local community banking?
More this concept of when assets come out of the banking system, when money flows. Okay,
got it. So because you're just going to flow it into a stablecoin instead of just having it flow through banks. Okay.
Yeah, I worry about a destabilization of local banking across communities. People might not feel it year 1 through year 10.
Yep.
But just like money markets over time.
Yeah.
And I do worry about that for communities. Even, I'm about as crypto forward, really involved in some of the legislations being written, really we have a lot of crypto clients as customers, but I also worry about the reality of our communities and feel, as I started this ironically with my Self-Made Boss book, trying to help micro businesses.
Yeah.
I don't want to destabilize local communities because I think it's good for America to have these communities be strong. And so that's something that's near and dear to my heart. And so I do worry about that. But I think the reality is at some point, because of technology, if these banks aren't able to keep up, and there is a way for that to happen, there is a way. It's not hopeless. But if they're not able to keep up on tech, I think a lot of them will shutter. And so maybe we'll lose the smallest 1,000 banks in America over the next 10 to
Is that
15
bad?
years.
Like, is that necessarily bad to go from 5,000 to 4,000 or?
No, but I do think it will have disparate impact across different communities. And so maybe it hurts rural communities a little bit more because who's going to be doing like ag banking and stuff like that? It really matters. And so I do think it'll have unexpected consequences in ways that you and I sitting here can't predict, but it will have consequences.
Would you agree with me that fintech has not been super disruptive to traditional finance to date?
So it's interesting. I think there's $24 trillion of assets that sits in the banking system. Not a dollar of it has moved out of the banking system.
Yeah.
But for money markets, I think fintech, which I also believe is hard to define at this point because it's hard to define what JP Morgan's products are doing and why things like ACH and FedNow aren't also financial technology products. The amount of money that moves over digital rails today is the significant proportion of money that moves versus actually cash, despite cash actually continuing to grow year over year about 6%, which I find confounding. But digital banking is the preponderance of the way money moves. And so fintech, I think, changed the user interface and it rewired some of the plumbing of how money moves and created some interesting new rails around how money moves and disrupted some of the old rails like ACH and even SWIFT in a multinational setting. But there's still a lot of fintech that uses traditional rails, and it's just created this beautiful veneer on top of it. Like Robinhood is so beautiful and easy to use versus some of the older trading apps or Chime or Cash App for peer-to-peer or Affirm for buy now, pay later. It's just like so much better. Like Ramp, if you've ever used Ramp for expense management.
Ramp.
It's beautiful.
Yeah.
And it shames old school tech companies.
Sure.
But, the definition of what a fintech is, I'm really challenged to truly believe that distinction still exists today, given how much of the money moves digitally, even in some of the most old school rails that exist in the world.
It's interesting because even like great companies like JP Morgan or something, like if you log into your Chase account, it is a terrible experience.
I know they need to hire designers.
It's so bad. It's like nothing works. It breaks. It's just like the worst system. You end up having like call customer success. It's kind of like if you went to a bank branch and there's mud everywhere and there was like rats like running around, you would just like run out of there. That's kind of what it's like when you go online to a Chase kind of system. I can't believe that they even are. Like, I would be so ashamed of that. If I was Jamie Dimon, I would literally be ashamed of this.
I more find the financial products like go get a debit card from a traditional bank and try to onboard to it. And it's such a bad experience versus an Atlas card or but having said that, they have their advantages, which is when stuff hits the fan and you can find a human.
That's right. That's why people use them. That's why they use them. If there's other things. Yeah.
And so I think they have their pluses and minuses because I find like customer support in some fintechs abominable. And so the fact that you can't get a person is equally as challenging in my mind.
Yes, that's
as
true.
How bad the user interface is in traditional banking. But I still bias towards more modern technology products. And I would use them all day long versus old school stuff. But, I'm living in a more optimistic view. And it's only when you don't know who to call in a crisis, that you're like, oh, damn, why didn't I
Yeah.
keep
In a
that old school
crisis, you
bank
want
account?
to be okay with JP Morgan or Wells Fargo or something like that, or
Yeah,
whatever it might be.
exactly.
The um, would banking as a service for consumer fintechs like even exist if the regulatory environment was less challenging?
So that's a complicated question for people who don't even know what banking as a service is. All
Yeah.
banking as a service means is there's an underlying bank that provides a service to another company who has its bank rails embedded in its product. That could be Uber or Lyft.
Yep.
For example, you have your credit card stored in their app. And when you get out, you don't pay. It magically just works, that the payment rail is charged. And then on the other end of that, their drivers are paid out also via a digital product. And they get paid out probably daily or by the ride.
Yeah.
And so those kinds of products typically ride on the rails of a bank like mine. And you would never know we exist. The way you know we exist is you find us in the disclosures of the financial products that you use, or a credit card will say issued by lead bank, or a debit card. That's the only way you know my company operates. We're like hidden infrastructure. And I think today, banking as a service is needed because companies, and there are all kinds of companies. It could be Apple, it could be Amazon, it could be Deere, it could be Lyft, it could be Uber. Those companies don't want to deal with the regulatory environment of owning a bank. I understand that. Having started one and bought one, it's kind of hard. I can't even tell you how hard it is. But I think some companies can do some of these things themselves. Like they can go out and get licenses in every state and go do like money transmission if they want to. Some people just don't want the burden. So it really depends on the product that they want to have and what kind of regulatory.
They're not even like often allowed to buy a bank to go do it.
Well, there's this idea of separation of commercial activity and banking activity. Yeah. And again, it's because if some company does stuff that's stupid and they run their company for growth, as American taxpayers, you don't want to be on the hook for that. Like you don't want to be on the hook for that. And so I think you have to understand both sides of that equation to have empathy for why banks are so controlled.
And when you think of like a company like Mercury, they're very, very interesting model. They don't do lending. So they basically take deposits and they pay out, let's say, a 4% interest, and they make 4.1% interest, and then that's the VIG on the
spread.
The VIG, and they can often make tens of thousands of dollars in an account if the big
by not
so
charging.
Exactly.
By not paying the interest out.
Exactly. You're paying like $10,000 a year for a bank account, which is often what you're paying if you're a startup and you've raised some money and stuff.
Ramp, Brex, Mercury. I think they all operate in that context where
it's an interesting model, like because traditionally you would take some deposits and then you would lend it out, and that's the spread that you would make by lending. But in this case, they're not. Exactly lending. They're just putting in a money market somewhere else.
Yeah, that's exactly right. I think there are a lot of companies who are trying to create a really attractive user interface. And underneath in the plumbing, they're using the advantage of their scale in order to get good deals with banks like us or others who are their supporting infrastructure. And they are trying to make up the difference in the spread. I think you see that in so many different products, even non-fintech products where, products are being aggregated in order to sell it to consumers at a higher price. I think
and sometimes the spread is just like they're holding the money for a day or 2 days and they get the interest on that day or 2 days. And so it's like a hidden spread.
Yeah, no, that's exactly. Trading is a great example of that. Like, do you know what the trading fees are between the bid and ask?
Yeah.
Nope. Or money markets are the same way. You pay different fees on those money markets. And I think, that's really the way financial services works. And I think traditional fintechs have just created a more beautiful product for people and tried to abstract away some of that pain in order to make it easier.
I do think for the average consumer, they have a good sense of how Walmart makes money. Like Walmart buys goods for X, they sell them for, or like Costco is usually
Yep.
like 1.13x. They sell it to you, and then that's how they make their money, right? And then they've got all the expenses, and they know that they got to pay their employees and they got to pay their
Yep.
rent. I don't think most consumers like understand how Robinhood makes money, how their bank makes money, how any of those types of things make
Even
money.
Coinbase, as an example, the spread and the custodial costs of holding assets somewhere.
Yeah.
Like, I'm not sure people really know. Like all those
That's right.
companies, it doesn't matter whether it's Coinbase or, any bank or any fintech. I think there is some abstraction about how the value chain in those financial products works. I think the only thing I could say is that financial products are usually so highly regulated that there is clarity of what the fee is you're being charged.
Yep.
And so at least there's pretty significant rules around that. I think trading probably has the most opaque sets of fees around spreads. But for the most part, like if you're using a firm, you know what the fee is. If you're using Ramp, you know what the fee is. It's pretty crystal clear, and they come right out up front
if
and
the
talk
fees
about
are specific, like if there's like an interest rate or fee, but often they're like these hidden things that you don't know. Like most people don't know how, again, like a Mercury makes money. That's out there.
There's a cool company called Flex that we work with that does rent payments, which rent is one of those weird things where, you have a big security deposit that most people can't pay for. It's usually a few months worth of rent. Then you get your paycheck every 2 weeks, but you have a big rent check up front. And so the dynamic of how that money spreads, I think, is super cool.
Yeah.
But like, that's an example where like right up front and center, when you go to the website, like it couldn't be more clear about what's happening. I kind of like that, actually. But like, it's an example of a sector that hadn't been innovated before, even though everyone knows the chunkiness of inbound paychecks to outbound expenses is really often a mismatch for consumers and businesses. And that's probably the biggest mismatch that impacts us. Like you get paid every 2 weeks, but your expenses could be chunky at the end of any given month. And you can't always pay it, or you need a few days of spread. And those spreads, I think, have finally been innovated with kinds of companies like this, or companies that are looking at mortgages. I think that's kind of cool.
Now we're starting to see like state regulators almost compete, whether it's like your regulator or Wyoming, Utah, Nevada, they're all taking different approaches. In some ways it's cool because there's like different experiments that are happening.
Yeah.
How do you see that evolving?
I think, like, to me, New York is the best example of someone who's done it well, even though I think in some cases they've been overreaching in what I consider to be like enforcement actions that are like trying to create law and guidelines where, you should have the guidelines first and then just enforce thereafter. Having said that, I think they have the best, most high quality team of all the states who do novel technologies. So like the BIT license is a great example of that.
What's a BIT license? I'm not familiar with it.
It's a license for crypto companies.
Okay.
To have special licensing in the state of New York. And so they created this thing, I think in 2015, called a BIT license. People have gotten licensed. Cool. It's a pretty rigorous regime to go through in order to both get one and then comply to monitor it. I think they're exemplary in how they operate. Exemplary with a little asterisk.
Yeah.
I don't think having financial products built at a state level, though, is optimized. I think the FDIC and the OCC are better regulators because they manage across 50 states. And so there's things like money transfer licenses that are state by state. But the reality is,
you're in Kansas City. There's literally a road in Kansas City where one side is Kansas and the other side is Missouri, right? So it's like, wow, it's like I'm on one side of the road. I have like a different thing I have to do. It's like crazy.
But so that's why I think I like the OCC and the FDIC as a more primary regulator to manage the complexity of 50 states. I think they're very easy to deal with. And if you want to be a bank, go be a bank.
Yeah.
Otherwise, let the people who, I dream every day of running my business. I think it's like the greatest thing I've ever done in my entire life. I love it. I love working with my stakeholders. And so, let me deal with all that burden and manage my my bank, and let others go deal with dreaming up new products and being really creative on the creation of things that are pushing the boundary of products that we haven't seen before.
Now, we have a new administration, and so we should expect to see a lot of changes in this world over the next, 4 years or so. Where do you think things are, not necessarily where you want them to go, but where do you think things will be going in this world?
I'd say, though, let me put a caveat on the impact of administrations in financial services, which is, I think regulators in financial services have been some of the steadier hands across all of the functions in administrations. And so whether it be Obama or Trump's first administration or today, I actually think they're usually lawyers who come out of a deeply knowledgeable background and have been exemplary. Right,
they're probably more the same than
backgrounds.
they are different, which isn't probably true in many of the other agencies.
It's not true. They're a little bit more politicized. Having said that, with one caveat that I've seen in recent years, which is the SEC recently was very polarized because of crypto.
Yeah.
And I think Gary Gensler in particular was a controversial figure because of his positions on crypto. And so he uniquely, in my mind, made the SEC more political than it had been in the past, where I always joke, like, the SEC is always run by a lawyer from Simpson Thatcher. I'm golden. Or a lawyer from Sullivan and Cromwell.
Yeah.
We're good. We're good. As long as you've got one of those folks, we're golden. And you kind of don't know their politics.
Yeah, exactly.
And so,
sometimes it was like Chris Cox was an ex-congressman and stuff like that. So you have those types of people too.
They're very knowledgeable. Yeah. And so the SEC, it was like a moment in time where I don't think that was the case. And then the CFPB, in my mind, since Dodd-Frank, when it was created, has always been politicized. And I think that's largely the case because the way it came into fruition and because of the way its advocates have championed for very unique causes, which I consider to be extremely left-leaning in their origins. And so the creation of that entity, in my mind, was very politicized. Now, some of what the CFPB has done is fantastic. I'm a big fan. Some of it, I'd say, was a mismatch of how financial products truly work and unintended consequences coming out of things that they were passing, and things like I just thought were beyond the scope of their mandate. And so I wasn't comfortable with some of the things they've done over time, because I thought even if something was a good idea, not a good idea, I believe if someone's got to stick to the scope of their mandate. And once they go beyond that, I feel like, they've got to stop. I'm like a true believer in the rule of law. And call me crazy. And so that's where, that institution has been a little bit politicized. And I think it'll be significantly curtailed, even beyond where it was in the first Trump administration. And I think you're seeing that with what was done on day one, and then what was done with the recent appointment that was being talked about. And so, I do think you'll see significant changes there. The OCC, Treasury, FDIC, these branches, I think, benefit out of a steady hand. And if you look at one of Scott Bessent's strengths, I would say he is steeped in the history of financial markets. And even though he might have been appointed in a Republican administration, that is someone who has spent his career understanding the depth and breadth and the history of how markets move. And so I think he is a very steady hand, even with a political bias.
Yeah.
But he is still a very steady hand across some of those administrations or some of those branches. Sorry.
Now, when I met you 12 years ago, you're working for Marissa Mayer, then you worked for Jack Dorsey. What did you learn from some of those people?
Yeah. I'd say Jack was pretty instrumental in some of the takeaways I use as a founder. One of the things he did that I consider extraordinary was his ability to listen. I've never met anyone who can listen and synthesize.
Because he's kind of like, that's kind of his brand, is that he's kind of a little bit quieter and he kind of like jumps in and, more of a stoic and stuff.
Yeah. Well, the secret there is that he's more normal than I think a lot of media would like him to come across.
I used to see him like walking like 2 miles every day to work. I literally just see him. I'd be like in an Uber driving by.
Yeah, of course.
And he wouldn't be, he never had he wasn't listening to a podcast. He was just walking. And I'm like,
he's probably
what is
enjoying
he thinking
the moment
about? Like he's got like a whole hour. He's walking, what is he thinking about?
Yeah, no, but I think that's probably the time to synthesize everything he's heard.
Yeah.
And to think through like where the world's going. And so I don't know. I find that quiet time incredibly powerful. There's nothing I love more than getting someplace where I really don't have Wi-Fi, putting headphones on, putting a hoodie on, and kind of just disappearing into my own space in silence and to music.
Are you listening to some like deep techno music or something? Or are you?
Some combination of total girl pop, like Harry Styles and Taylor Swift. Although I do like Oasis and Pearl Jam.
Oh yeah, okay.
Prince,
it's more my yeah,
Nirvana. I'm aging. I'm putting myself right strike in
totally.
In a certain age range. But Green Day, can't forget Green Day. But I listen to that. I listen to podcasts. I listen to books on tape, which I really like, Audible. And so I go into my Zen moments in order to just give myself time to think.
You're a better listener because of that experience you had with Jack?
He's amazing. And then one of the other things he did that I actually apply is that whenever there's friction between executives, you make everyone come to the same room. So you don't have one-on-ones with people. You try to hash it out openly in a room. And
can it get awkward and stuff? Or how does one do it in a
awkward.
way? Okay, yeah.
Totally awkward. But if you're grown-ups, you need to hash this stuff out.
Can't talk behind people's back. You got to tell them to their face what they think. Yeah.
And I think there's a great lesson there. Like, don't do these one-off conversations and come to a decision on your own without a rationale. Like if you can go through things and try to explain why you're biasing in one direction or another, I think that's incredibly powerful and is a good lesson for the next step and where you have the next set of friction. I think people learn from those principles and move forward into the next time. They're going to prevent a crisis next time because they've seen how you've worked through that with them. And I think that's incredibly powerful too. I learned that Jack's incredibly normal. So he's a normal dude, just like anyone else.
Well, I mean, I don't know. Most of people are sure not that normal. So I don't know.
Yeah, I guess so. We all have our spikes of weirdness.
Exactly. Now, Block, I thought, made a very fascinating choice to keep, you got the Square and the Cash App as totally separate brands and products. Like it didn't combine them. Even as Square was building out like a whole platform of financial products. Like what was the insight to keeping those separate?
So Square is a company that had historically been uniquely inventive. There aren't that many companies that can create multiple multi-billion-dollar products organically. One of the strengths, it's rare. It's really rare. Most of it's done by M&A. And Block has an ability to do that because Jack will take an idea, he'll fund it, he won't let anyone touch it. He'll give it an independent team. That's the way my business around lending and financial services was built. Mm-hmm. The bank was built that way. You are completely given your own domain. And then because of financial services,
so he's almost like a venture capitalist funding things internal. Okay.
Yep. Which frankly is what a CEO should be.
Whatever. We just don't hear about the failures.
You're an asset allocator.
Yeah, you're an asset allocator.
That's what a good CEO does. Yeah. And so in this case, though.
So you almost have like a Series A and Series B internally and stuff. Like if you're hitting more metrics, you get more money. And
And if someone has a good idea, even if it comes from a hack week, like my product came from a hack week,
Mhm.
and he basically said, like, team, go build it. And you kind of start with a few people and go from there, and you build these things into multi-billion-dollar businesses. And I think that is also an insight from working at Block that is pretty rare to see. And I describe companies when they get bought in an M&A deal, that they get loved to death, meaning a company is acquired, it's its own brand, it's its own business. You try to keep it independent so that it could continue to thrive. But unfortunately, everyone wants to love it and show it
Mhm.
some love. And they want little bits of attention from
Yep.
lots of people everywhere across a company. And it gets smothered by love.
Mhm.
And so first it starts with the finance team, the HR team, the
Yep.
legal team, these
Yep.
foundational functions that also need control. And then product people want to get connected and engineers want to get connected. And all of a sudden you've lost the culture that you're trying to maintain with this gem of an independent company that is on fire and going and continuing to build its business, because you've just smothered it with love.
Yeah.
And so for some of these divisions at Block, we tried to not smother them with love,
That's
and we
so
swatted
insightful.
people away.
Yeah. It's so interesting. I remember when my company got acquired, and um, like the CIO of the company, chief information officer, it's like, all right, great. We're moving you all to, our Microsoft suite so you can interact with everyone else in the company. And I'm like, we're not doing that. And he was like,
Yep.
well, yes, you are. I'm telling you have to do it. I'm like, well, at least for the next 12 months, I can't be fired. So at least for the next 12 months, we are not doing that. And he was just like shocked that like someone could tell him no.
But stuff like that matters, because even internal communication systems are part of a culture.
Yeah, of course.
Like if you
and
were
I could
to
see it from
move,
his perspective why it was so important.
yeah,
And it's a trade-off that you have to kind of figure out. There's no right answer sometimes.
but that evolution could kill a company. And so as things
Yeah,
get
I'd have
loved to
some of my
death,
best engineers would have just quit the next day if they were on the Microsoft stack for no good reason. They would have just quit. So I didn't want to lose
I
them.
know.
Yeah.
I know. Well, they don't like the tools. And if the tools aren't good for their business, it's just every day they come in and they're now annoyed and frustrated.
Yeah, exactly.
And no one wants that.
Yeah.
No one wants
especially
that.
when they have lots of options.
Yeah. No, agreed. And so, I think it was pretty fun to do. Like, we created multiple products from nothing. And, as long as you're kept alone and funded, you really can grow these massive businesses. And, Cash App's the perfect example of that.
Now, a few personal questions. Your younger brother, Jacob, is the chief of staff to Vice President JD Vance. Was there something in the water when you two were raised? I know like that. You're both super incredibly successful people. Like, what did you guys learn from your father? Like, how did that kind of come about?
So, my brother has worked with JD Vance since before his Senate run, and I'll be honest, I didn't see this coming. My brother is really, 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 really smart.
Yeah, I've met him before. He's one of the smartest guys I've met.
Yeah, he's much smarter than me. I'm scrappier. He's smarter.
Okay.
And
I mean, he definitely has a huge brain on him. When you meet him, you realize that immediately.
Yeah. But we're from Atlantic City, New Jersey, which is not exactly the bastion of success. Yeah. And so, I mean, I think the poverty rate is double, the welfare rate is double. Our family owned local businesses, which I think is why small companies are near and dear to my heart. And I want to see the fabric of communities continue to thrive in like little tiny communities. And by the way, I did grow up going to Tyson fights with Donald Trump when I was a kid, which is mind-blowing in retrospect. That is in fact true. And my stepmother was his head of PR in Atlantic City. But I think the commonality for my family was intensity around hard work and this scrappy work ethic of being a local entrepreneur. There was no such thing as 9 to 5, no such thing as 5 days a week.
Mm-hmm.
And so this idea and ethos around work ethic and not having anyone be able to advance you without you doing the work yourself. Like, we didn't have someone to help us get us into college, and we didn't have all the fancy trappings of wealth in the same way that a lot of families do. And so I had summer jobs every summer. He had summer jobs. And I think that makes all the difference in the world, to be honest. I try to do it with my own kids. So my son was a busboy at a Mexican restaurant in Aspen, Colorado this summer.
Yeah.
And he was 15, but I'll be damned if he wasn't going to have a summer job and not work for his entire summer.
Yeah.
And
you learn so much. I remember like going in, my first kind of job like that when I was 14, I'm going in and I'm like cleaning the machines and I worked at like a ice cream place. You're cleaning the machines and you're dealing with annoying customers, and you're in the back, like someone threw up and you're in the back, just like cleaning it up, or the toilets.
Gross.
I mean, you learn, and you have to show up on time, and you're given a lot of responsibility for your age. It's like I learned way more of that than I learned in probably most of my college classes or anything like that.
It's amazing. So my son's first day of work, and he's 15, he got paid $70 in tips.
Whoa.
And he came home and said,
Aspen.
It's Aspen. So he couldn't even buy dinner.
All right. Okay.
All
right. That's only an Aspen thing. Yeah.
He rode home on his bike from work, said, I don't understand. How am I supposed to buy anything? I said, yes, that's a good lesson now, isn't it? How are you supposed to buy anything?
Mm-hmm.
Like, you better put your money away in the bank and add it all up and see what you get at the end of the summer. Stuff's expensive. So work very hard. And, you're going to learn every year. Hopefully you'll start to make more and more money as a summer job, but things are expensive. Have some appreciation. And so that was his learning over the summer.
Oh, that's amazing. A couple more questions. What is a conspiracy theory that you believe?
So I'm not convinced that the video of the moonwalk from July 20th, 1969 is real video.
Oh, okay. So you're not necessarily saying they didn't go on the moon, but you're saying that at least the moonwalk itself may have been a doctored. Yeah.
No, I believe they were there. I believe they planted the flag.
Yeah.
I believe all that. But the video is a little bit too good for that era. And I don't understand that. I've had the UFO stuff disproven. So like my questions about UFOs recently were disproven by a friend of mine.
Okay.
All right, that was good. But the moonwalk thing still sits with me. The video.
Yeah.
Random.
I gotta watch that again. I'm kind of
go research it, and you'll see what I mean.
Yeah.
Totally weird. But I don't think I'm not a conspiracy theory person. Like, I'm so happy. I wake up every morning, and after thinking about my kids, all I want to do is go to work. I have so much fun. I love my friends. I love my kids. Like, I'm pretty happy, and I think I'm kind of changing the banking industry. And so
I love it.
I don't spend any time thinking about conspiracy theories, but I do find them funny when people talk about them. Sometimes they make me feel dumb, though.
There's a lot of them in banking. There's like 1,000 conspiracy theories in banking and stuff.
Maybe, but I don't, maybe I'm not a deep thinker. As I said, I don't think of myself as that smart. So I'm not a deep thinker enough to be insightful enough to find these things. I have to wait for someone to point them out to me. And then I'm like, I got hit by the idiot stick. Why didn't I know that?
All right, last question we ask all of our guests. What conventional wisdom or advice do you think is generally bad advice?
Oh, wow. I love that. What's bad advice? Oh, my God. Oh, well, so what's bad advice is probably advice that's given to women about how to think about managing their career for their own kind of like reality of life timeline if you want to have kids.
Mm-hmm.
And I always advise people to just lean into the job at hand and what they're doing and what they love and stop worrying about that stuff. Like if you're in a great job and you put your head down and you're doing really well, you'll do just fine. Like having kids is never convenient for any parent. You just kind of have it, have kids, you figure out how to make that happen. It's always
but
like
what's the advice that's bad? I'm not
so
following.
The advice is don't try to pre-plan your life around that timeline because you have to think like, what career should I go into?
Oh, so you're saying people are giving him advice the other way. Oh, you have to pre-plan. You have to kind of think it through. You have to, and you're just saying, just do it. Just if you want to have kids, have kids. Like don't think about the other stuff. Yeah.
But and don't take yourself out of the game before you should. Like do your best work. Like don't pre-think, oh my God, if I'm not at this point in my career, like, should I go to business school? Because then I'll be 30 by the time I get out of business school. Just stop it. Like,
interesting.
Just go for it. Head down, get it done.
That's really interesting. And I don't think I'm having a lot of these conversations with people about that, but I have heard quite a bit of these types of things, where people start having like angst about stuff and
the timeline in their career. And I think at all moments, give it your all. And stop psyching yourself out of the best available opportunity right in front of you at that time. Just go get it done. And honestly, I believe that if you put your head down and do great work, and if you work at a company where you're not recognized, leave. Yeah. Like, don't wait for them to change. You got to get out of Dodge.
If you have a bad boss, leave.
Get out of there. You're never going to convince them that they're a moron.
Yep.
Like, it's never going to work. Yep. Or like move to a different team. But like, if you put your head down and just make stuff happen for yourself and maneuver yourself constantly, take the best available opportunity that's right in front of you. And magically, when you look back 10 years later, you're going to realize you made a lot of progress.
Yeah, I love that. All right. Thank you, Jackie Reeses, for joining us on World of DaaS. I follow you at Jackie Reeses on X. I definitely encourage our listeners to engage with you there. This has been a ton of fun.
Thank you. See you later.
Thanks for listening. If you haven't already done so, please subscribe to World of DaaS wherever you consume your podcasts, YouTube, Apple, Spotify, and more. And please help us get discovered by leaving a review. And check out worldofdaas.com. That's worldofdaas.com. And of course, connect with me on Twitter at Auren. That's AUREN. Would absolutely love to hear from you.